Good morning, it's Jonathan Barrett with this week's Market Buzz. US equities continue to run to record levels. S&P passes 6,600 and the Dow climbs above 46,300. Seems to be running on vapor. Let's see. US dollar index rose for the third straight session, 97.8. Looks like a correction's underway. It has rebounded from the lows, the 2022 lows. So seems a little bit of a correction is in the wings. US signs of progress in the US-China trade discussions. Seems to be lengthy, but obviously a lot to talk about. Trump and Xi take on a lengthy call. Interesting to see that Donald is talking to everybody. So let's hope something comes from that. Also, Fed obviously provides a dovish announcement to the market. Interest rates are down by 0.25%. Powell is suggesting that there could be another couple of ones. Remember, this is not start of a easing cycle. It's more, what does he says, risk management, which I thought was quite an interesting word to use. So quite interesting. Aussie unemployment steady at 4.2%. Things seem to be going okay here. And silver continues to trade on higher. Takes out the old highs. So let's see. It takes out those old 11-year highs at 43.06. So onwards and upwards from that way. Also, oil reverses recent gains, weaker economic conditions. So I think there's a lot out there at the moment to talk about. I think the most important thing is to talk about the move in interest rates in the States. Now, there was a 25% basis points move by the Fed last Wednesday, and that brings interest rates to around about 4%. And to me, that was really interesting to go through the statement. And in this week's Market Buzz, we actually take a deeper dive into the FOMC meeting minutes and the statement provided by the Fed as to why they moved on interest rates. Now, it was a foredrawn conclusion that they were going to cut interest rates by 0.25%. The key now is whether or not we get two more, which was actually signalled in the meeting that they'd have another two rates this year. Somehow I think it's a bit of a long shot, but let's see what happens. I think the most important thing here is the Fed basically is saying, well, look, if it's a risk management structure to move on rates, then they are waiting for economic conditions to actually show that it is needed. Now, when we look at that, we're looking at the potential here, stagflation within the US economy, where we have inflation still well above the mark, the 2% mark put out by the Fed, and we've got employment conditions, unemployment which remains remarkably weak. Now, to the tune that I've been saying, 916 jobs, 1,000 jobs were created so far this year. Now, that's not a very strong economy. And I think when you look at it, you've got weak employment, and you've got strong inflation, still resilient inflation, very sticky. And to me, those decisions, it's correct because it is a risk management decision that they're actually making. And I think the other side of this, we're seeing equity markets continuing to run on vapors. So it's quite interesting dynamic which the Fed is dealing with, because asset prices are moving higher, so there's wealth in that market, but we're really not seeing that within the higher side of it when we've got a weak weak employment data. So I guess in a nutshell, you're seeing the US economy is showing those signs of slowing, growth moderating, softer hiring, and a slight uptick in unemployment. So really, what is the Fed telling us? It's sort of saying, well, okay, they want to sort of continue to get the economy to grow, and I think moving interest rates to this 0.25% is a good thing. But I do get a sense that if inflation continues to stay around this level, very sticky, that a reduction in interest rates might actually do the opposite, where it might stimulate more prices, more demand. If that's the case, then that inflation issue will start to gravitate more to the top side. Also, given the way we feel with the tariffs, that's a double hit. So you can view what's happening in inflation in two things, or the cut in interest rates are saying, well, the economy needs it, this is going to support it. But if your inflation is quite sticky, then it's just not going to cause price pressure to the top side. Anyway, let's see how that works. Remember, the Fed does look at the PCE, and what we've done in this week's report, we've actually compared the inflation rate to the PCE rate, and you can see both of them are on an upward trajectory. So that's why I think that you'll find the Fed will hold off on the other two to let the market know that in a risk management structure they can actually do it. So there's a really cool little chart in there that should be looked at. The other thing, when we looked at the employment, and when we look at what is occurring there and the revisions that had, when you look at the job growth being quite small throughout the year, from March to here, it's the largest downward adjustment we've seen since 2000. Now, that means that the economy is not creating jobs. So why are companies sort of having better results? And obviously they're letting people go in order to maintain profitability. And that's a double-edged sword there, because if the economy does turn around quickly, you've got to hire them quickly, and once again, it's inflationary. So I think there's this discussion about the employment and inflation, and I think combining that doesn't hold too well in my mind for the long term. But as we said, the Fed do have that ability to lower rates. Of course, they're at a reasonable level. 4% is not too bad to manage, and quite easily going to 3.5% would be, I think, an overkill. But it's good that they've got good policy tools there. Okay, so that's I think it's quite interesting to keep an eye on that. Do keep an eye out this week. There will be some more FOMC members coming out and about the rate cuts, so keep an eye on what's happening there. The key data will be the PCE inflation out this week and personal consumption and spending in the States. So I think that, to me, is something that's going to be quite keen to have a look at it. We've got other PMI surveys for other economies, but obviously the US is the one to watch. So quite a big week, lots out there as well, so to keep posted. So let's have a look at some of the trades that we're looking at in some of the markets. I'll just move there and share my screen. Yep, that's that one there. And share. Okay. Righty-ho. Now, when we look at it, what are we looking at here? Aussie dollar. Okay, Aussie basically has come back. It's under consolidation. That 67 is a big level for it. Hit a little target, and now we're consolidating. We have come back quite a bit. So I would like to see the market oscillate between 65.50, 66.50 before it starts to move on. Obviously, the US dollar is a little bit firmer, as we noticed in the US dollar index. So that Aussie sort of just coming back a little bit. I still think that a low significance is in for the Aussie. And let's just see how that pans out. So that's that I will actually, there we go. So let's have a look at the S&P 500. Equities, record highs. What more can we say? Running on vapors, we've got some major divergence starting to throw here. At some stage it will correct. The question is under what will cause it. So in my mind there, just wait and see. We remain short in the market, and we've reduced positions, so we'll know, but we will act as soon as the market turns around, and we can see the reason for it to react to the downside. So when you look at the Dow, we look at the S&P, all the same, and even the local market, the ASX 200, that has corrected. So more sideways to lower price action there, I think is on the cards. So as you can see here, this correction here, if we take out, I think this low around here, about 8,750, then the correction comes down to here, 8,500. That's something on the cards that we're looking for. So, and still remain short there. I'll just check with the dollar index. Doesn't give us a lot of news on that. So we'll move on from that. Silver, as we know, just keeps on going, which is great. Great trade. Happy to be long there, still long. And that's been quite a standout for trading this year. We do feel that that's still got the propensity to continue to go higher. With the chance of more rate adjustments in the States, that's going to rely very heavily on where our precious metals go. When you look at silver, that's got to catch up. It's got to do a little bit more than gold. As we know, gold remains right at these heavy levels, as we can see right at the top here. And anywhere to sideways price action is fine. 3630, 3600 is good support. As long as it stays above that area, then I think it's okay. But just be careful, be cautious, because if we do see a flight to quality, if we do see more on that interest rate or less on that interest rate, then the US dollar will firm. That'll put gold under a little bit of pressure. Okay, Aussie we've talked about. Euro. Now we mentioned this is a new trade for us. Now we talked about the euro, and in last week's report we actually talked how the eurozone was quite negative. Germany was not performing. The economy is sort of stagflating. It's not doing what it needs to do. So in light of that, we actually feel being short the euro is the way to go. When we look at the charts, we can see that obviously we've got some good divergence here. And I like seeing those sorts of programs where I do see that divergence. That tells me that in for a correction. The fact that we didn't break and stay above 118 to me was a big one. 118 was major resistance. The fact that we didn't stay above that and we've come back so hard, in my mind, turns momentum around. People start to take profit. And I think if that US dollar starts to firm, then you'll find euro. Now, we do think it's overvalued, and given where the state of the economy is in Europe. So hence, short position here, which we've taken on, and stops above that 119.40 or even a little bit higher, 120.10. So that's the euro. So pretty much, I guess, oops, move that over there. Okay, there we go. Okay, so that's that's pretty much it from me for this week. Hope everyone has a great week trading. Lots out there to do and see. Safe trading, keep your stops in, and we'll talk to you later. Bye for now.